Hi everyone. Thanks so much for joining another market update in another interesting week for financial markets. And it's just worth noting the US government is still shut down. Now let's have a look at what that means for financial markets. We're going to dive straight into the charts, my typical favorite chart there, which is world equity markets. This, if you just follow my pointer, can show you really nothing too exciting going on this Tuesday. We're pretty much flat. Now, if we just go up, US markets aren't quite open yet while I'm recording, but we did register gains at the start of the week for the S&P 500 and the Nasdaq, and the Nasdaq made a record high. Now, let's take a look at that chart. As you can see, just a really nice uptrend there. So record high, the second record high of the year so far. So we are really just much more than the second record high of the year so far. We are just absolutely flying it. Second record high of the month so far is what I meant to say. So we've really done very, very well for the Nasdaq and for US stocks generally. They're being powered by some really strong themes at the moment in tech, but largely as well outside of the Magnificent Seven. Advanced Micro Devices, AMD, that is not in the Magnificent Seven. It is a tech stock which is worth a fraction. It is a tech stock, it is a semiconductor stock. It makes chips for AI. It is worth a fraction of NVIDIA. But look at what happened to its stock price yesterday. If I just put you on the chart, massive upswing in its stock price. That is because OpenAI, that's the maker of ChatGPT, they said that they were going to have a 10% stake in the company, and AMD was going to produce all of their chips for 6 gigawatts of power for their GPUs, which are going to power the AI infrastructure that OpenAI needs to continue building these inference models, which will continue with the AI development of AI and the revolution of AI in all of our lives. So that had a huge impact on the stocks. It went from $166 all the way. It closed on Monday evening at $211, and it's higher again today. So that was a 23% increase on Monday, and it's higher again today in the pre-market on Tuesday. It's up by another 1%. So this is a theme that keeps on giving. Why did this have such an impact? Well, it really highlights a new dynamic in the AI trade where the big AI players, the hyperscalers like OpenAI, who are creating all of these inference and large language models, they are willing to take a stake in the supply side. Now, we've seen them take stakes in demand side before. Well, NVIDIA has in the past. This is the opposite of that. This is where OpenAI is saying, I'm going to buy the supply, downstream suppliers. This is quite unusual, but it does show, firstly, how much cash these companies have, and secondly, that they really want to grow. So it's seen as being a bit of a turbocharge for growth, that there's real demand in AI chips in particular, and that this could fuel AMD's share price for some time. So we saw that uplift yesterday on Monday of 23%. What does that mean? Well, that shows that really it puts AMD in the center of the AI world, a bit like NVIDIA. Now, if I just show you a chart, the orange line on this is NVIDIA's market cap, and the white line is AMD's market cap. So there's always been a gap, a valuation gap between AMD and NVIDIA, where NVIDIA is worth many, many times what AMD is. But as you can see, this chart has been normalized to show how they moved together over the past year. That gap narrowed significantly on Monday. So that OpenAI deal is really changing the landscape for AMD, and it might start coming back and become a real not threat to NVIDIA, you could see the two of them going, but a real competitor to NVIDIA, instead of being just the little cousin that no one really thought about too much. So that's been one key theme that's really driven US markets to record highs at the start of this week. Now, what we've seen in Europe, if I go back to that world equity page, is a more nuanced picture. So if I look just at month to date performance, as you can see, we've seen a bit of outperformance from European stock markets. Now, they took a wobble on Monday. So just since the start of October, we have seen some outperformance in European stocks. But they did take a wobble at the start of the week, and that came down to France. We've had another prime minister that resigned. France, the Eurozone's second largest economy, remains politically rudderless, and that has caused an increase in bond yields. So as you can see here, this is the 10-year bond yield. The French 10-year bond yield, if you follow my pointer, is up 5.4 basis points in the past week. It was up about 7 basis points on Monday. That was because of the political turmoil, uncertainty. Will it lead to fresh elections? Will it lead to more political dismemberment and disarray? But we have seen French bonds underperform their European peers. UK yields haven't done too well either, because remember, we've got a bit of a fiscal issue here. But every government that seems to get created in France, or prime minister that is picked by President Macron, they cannot seem to get a budget through. So that is a real problem. And certainly as we look down the end of the year and look into 2026, we are worrying about fiscal issues in France when they can't pass their budget. So we've also got political problems in the US as well. The government is shut down. We've got a very conservative new prime minister in Japan. They had a political change as well at the weekend. So it looks like every corner of the globe has got something going on with it. But that is playing out in bond markets. So bond yields, again, a sea of red, and bond yields have been rising very sharply across the world so far this week. If we actually look at the 30-year yield, I'm going to mention this to you. We saw a 15 basis point increase in the 30-year yield in Japan. So Japan's long-end bond yields, they're absolutely surging. That's because the new prime minister is seen as being very, very dovish, so no rate hikes, and also big into stimulus and spending. So why are bond yields rising, you may hear me ask? That's because there's fiscal concerns in Japan now as well. Now, they've been brewing for a while, a bit like the UK, a bit like France, and into the US as well. So it's really interesting to know, when will that potentially be a tipping point? Because right now, equity markets are really willing to shrug it off. Now, I don't think there will necessarily be a tipping point that causes volatility, that causes stocks to fall. Do you know the reason why? Because a lot of those tech stocks, a lot of stocks across the world, including in Europe, there's some really strong companies in Europe, but the tech stocks, the Magnificent Seven, and even the level below that in the US, in the tech sector, they are swimming in cash. They are very strong. They are run better from a fiscal perspective than our countries are. So that is why I think maybe things in the bond market may not necessarily cause a massive meltdown in stock markets, certainly not anytime soon anyway. So just looking back, as I said, as you can see here, we've got that record high on the Nasdaq at the start of this week. But what else is moving higher? We've got a debasement trade going on now. We've written about that this week, and we've posted it up on the XTB Market Analysis website, so you will be able to see that. But gold, just look where it is. It has taken some more record highs on Tuesday, just a succession of record highs. It is doing so well. It is absolutely flying. Currently trading at $3,958. It is staring at the face of $4,000. So in amongst all these fiscal woes, weakness in the dollar, we're also seeing real surge in gold. And just to finish off, I want to show you the dollar. It is gaining against its G10 counterpart so far today. So if we just leave it there, thanks so much for joining, guys, and good luck trading this week.